So we have Bitcoin trading at $69,000 in arguably one of the most important weeks that we've seen for crypto, and that's because of the US elections and the FOMC, which is coming up later on this week, well, tomorrow and the next day. So we have a lot to look at. Expect major volatility within the market, and you can see the sentiment is really beginning to shift, with a lot of people who were previously very bullish are now starting to flip bearish, and a lot of that's got to do with this candle over here on the weekly time frame, given the weekly close. But in today's show, we're going to analyze the charts. We're going to have a look at the weekly time frame, the monthly time frame, and we're going to speak about why this is potentially the catalyst for the next major move. A lot are looking at this candle over here as a bit of a spinning top candle, a bearish reversal candle, swing failure pattern. You'll hear all the various different terminology and analogies coming into play over here with Bitcoin at that key $69,000 level. So expect that there's going to be major volatility. Of course, these are your high impact economic data events coming out. It's going to be the US presidential election, votes coming in over the course of tomorrow, and we'll see what the results look like over there. And then on Thursday, we have the US FOMC press conference and the Fed funds rate decision, which is coming out. And that's going to affect what the market does next, right? Why? Because the market hates uncertainty, and it prefers to position into certainty to make it less of a gamble, right? It makes sense, right? Because if you're analyzing the risk to reward, when it's uncertain times, it removes your edge as a trader or an investor, and consequently, you prefer to just stay out of the market. That's essentially what tends to take place. Now, if there is going to be a surprise interest rate cut this week of 50 basis points, which is a possibility, a lot of the top economists have at least projected that this is a potential possibility, then expect that there could be a big FOMO trade that comes into the market at a later stage. Let's say best case scenario, the at least crypto president, which is Trump has labeled himself as the crypto president, takes the reins, wins. You're probably going to get a marked up move within the crypto market with that surprise interest rate cut and a positive at least outlook from the FOMC press conference. Then this could position the market back into a risk on environment, and you'll quickly see a repricing. As it currently stands, well, it's definitely risk off, and especially if you're in the weaker altcoins, you're probably getting absolutely annihilated. So in today's show, we're going to have a look at what you can do. We're going to look at the validation and invalidation levels depending on where you're positioned on the long or the short side, and then we're going to see what the most likely next outcome will be. Now, we've seen this, right? We've seen this every first couple of days of each of the prior months, so July, August, September, October, November. We typically go through this, pullback period, right, into the monthly candle open, and then we set the low of the month, and then prices tend to climb back up. So is it that we're doing something similar? Well, it's possible, right? When we look at the data over here, you can see from Eric Crown, he's gone through all the analysis. He says that the low of November has always been before US elections. Will this time be any different? We also identified on Saturday's show how typically it's between the 2nd and the 3rd of November that you tend to put in that low, which is right before the elections. And really, as Elio says in the comments just below there, so far, nothing has really been too different. And it's actually true, right? If you look at the outlook of the markets over here, well, for this entire cycle, ever since the low, we've been following it to perfection, to an absolute T, right? We're currently the purple line, the green and the orange line over there denote the 2017 and 2021 cycle. And for the most part, we've been following along the trajectory pretty much to perfection. And you can see what sits on the right-hand side of the chart is, of course, a markup phase and continuation where you lead into that final phase of the bull run, right? So not much in that regard has changed. Now, what have we typically seen on election days, from at least some of the earliest elections that we had in 1952 all the way to current elections, the last election, which was Biden, right? And you can see the opponents and then the winning presidential candidate, even when it was an unfavorable win, or, some people called for at least nefarious activity when it came into those wins. Nevertheless, the average gains were still 2%, right? And there was a positive at least result in the stock market 67% of the time. So for the most part, generally speaking, these election phases lead to the market running onwards and upwards, right? As Jason Pizzino says, name a presidential term, specifically that whole 4-year term in the last 60 years that didn't see a new all-time high in the S&P 500 or Dow Jones? And the answer is there isn't any, right? It's pretty much just marching onwards and upwards. Even during those presidential terms, if you do see a bit of a bear market, by the end of the 4-year presidential election, it's been regained, right? Price has been regained all the way towards the upside over there, and it's been salvaged, right? So far we've been looking at the consolidation between gold, the S&P 500, and NVIDIA, and there's been a lot of similarities, right? With gold leading the move, pushing to all-time highs on a monthly scale. S&P 500 futures has followed. We've seen NVIDIA, which is one of your top tech stocks out there as well, pushing towards all-time highs. And now we have Bitcoin, which presents a very, very similar price action in the sense that we had a high time frame market structure break, and we're still in that consolidative environment. So is it that Bitcoin is just lagging? Well, it's possible, right? At the end of the day, all we can do is trade the chart that's in front of us and look towards the stock market, right? Look towards the stock market for guidance, since that holds a massive amount of the liquidity. So if we do have a look at the stock market over here on the S&P 500, you can see still very much range bound in the very short term. This is your daily time frame. On the high time frames, it's pretty bullish because each month is a new all-time high close, and there's nothing bearish about that, right? If you keep putting in all-time high closes on a monthly and a weekly scale, that is the definition of a bull market, right? So by definition, you would expect continuation. Now, the key levels that we're looking at for support over here still remain the same. We can see a slight pullback over here on the S&P 500 into last week's close, and you're looking for anywhere between about that 5,500 to 5,600 as a major support region where we should see a bit of a reaction out of that zone. If we look at the Dow Jones Industrial Average, well, your major support is coming in over here at this $40,000 mark, right? 40,000 point mark. That's the area of interest. If you do see continued pullbacks, even if you hit that level, and it might feel a little bit scary on the drawdown period, right? If you look as a percentage, you know, that could mean another 5% down, which is pretty big for stock markets. But nevertheless, you're still putting in high highs and high lows for the most part, and you're flipping key areas into support. So if you do want to trade these markets, by the way, they are listed over here, of course, on Prime XBT. If you look at the daily as well, you can see on Prime XBT, the histogram is starting to tick up over here on the S&P 500. You have the S&P 500. You also have the Dow Jones Industrial Average. If we click on that one over there. So if you do want to trade any of these, look at that histogram is also starting to turn up. You can take the trade over here on Prime XBT. You know, they are partnered with us. There's a link in the description below. You get yourself a 20% deposit bonus. So if you put in $10,000, you'll get $2,000 risk-free to trade with, right? Or alternatively, you can opt for the 25% discount on commissions or trading fees for the lifelong time that you use Prime XBT, right? So use the link below if you do want to trade that. We're also looking at the DXY, which is starting to break down over here. It's not enough. We need to see at least 3 days in a row of continued downward price action with lower lows and lower highs in the daily time frame, and that will be a major signal that you're probably going to see the DXY lead into the drop off over here. And we'd expect that we should get major reactions leading, of course, into the FOMC as well as the presidential elections, which are coming up. So expect it's all going to come to a head this week, right? At the end of the day, remember that the trends for Bitcoin on the high time frame continue to remain towards the upside with higher highs and higher lows. And if that maintains that trajectory, well, then we should see the trajectory of the USDT dominance also breaking down. And we know that tends to bring big moves. So a lot of it's all coming to heads with the S&P 500 and the Dow Jones nearing major support levels, with the DXY nearing major resistance levels where we're looking for a bit of a reversal or pullback. Same thing on the USDT dominance. And here is your Bitcoin chart. Remember, if risk does come back into the market and all these hedges start to reprice things and move on to the long side, then you're probably going to see a big move up over here, right? And this is typically what the bull runs look like. If you use these ghost candles over here, this is what your expectation would be, how quickly price could move up into, of course, that deep $110,000, $120,000 region. That could be realized as soon as April or May of next year. The important thing to understand is in the bull runs, when there is a repricing that comes into risk and risk returns, it returns very quickly and in a very, very big way. So keep your eyes out on that. Now, let's analyze the weekly time frame over here. Candle closes are oftentimes much more important than the interim price action within that weekly candle. So if you do want to remove some of the noise, all you have to do is simply go from at least the candles onto a line chart over there. And if you look at the line chart, it's still looking pretty strong, right? What this should tell you over here is that we do have officially the 3 candle closes that I was looking for. Remember, the 3 candle closes at key resistance areas and above the prior downsloping trend line over there, which was governing prices towards the downside. That is your confirmation, right? 1, 2, and 3. Now, if you look at the open and closes of these candles, all of those occurred above that $67,000 region. If we can see continuation of this, but more specifically above $69,000, that is the major area which most people are not looking at for bulls to continue to gain control over, right? That $69,000 region. That should lead to a major marked upside move, right? So we're still waiting for that. The monthly still looks good. The weekly still looks decent despite what that wick looks like on the top side over there. We have actually seen these wicks a couple of times before within other parts of the cycle. You can see all the swing failures over here. You can see the swing failure pattern over there. Led to a little bit of downside and then immediately straight upside continuation. So use for the sake of ease the 21 exponential moving average as your proxy. As long as price remains above that on a closing basis, it is good, right? It is still good. And if you look at your moving averages over here, again, this is still giving you a bullish posturing with the 3 above the 9, above the 30, and you're starting to angle these towards the upside, which simply just means slight pause and consolidation before continuation higher. You're still coming off low volatility, thus supporting that this may just be the start of the trending move over there. At least for Bitcoin, right? Remember, when it comes to altcoins, it's a whole nother story. Others against BTC is breaking down. Total 3 against BTC is breaking down. That paints a different picture. If you're in weak altcoins, you're going to continue to get annihilated. And truth be told, even when Bitcoin is trading all the way up here in the $100,000 territory, if even then at that point you're still holding weak altcoins, the chances are those altcoins will still continue to move towards the downside because there are so many coins in the market at the moment. You have to really be picky about which ones it is that you're positioning into, right? So if we look over here at the liquidation data that's just come out over the last 24 hours, you're seeing an increase in volatility, right? Both shorts and longs getting wrecked. 140 million worth of longs, 80 million worth of shorts, so giving you a combined 24-hour liquidation total of 220 million. And if you look at the bar charts below, this is typically what happens, right? Just before the next major move, you'll see this constant chop over here as bulls and bears try and fight to take control, right? Longs get liquidated, shorts get liquidated, longs get liquidated, shorts get liquidated, and then eventually you put in the actual real move. So this is a sign showing you that volatility is starting to increase and something big is about to take place, right? You have your liquidity overhead over here at $70,400. So if price does move into there, you're going to liquidate a bunch of short traders. If you look at the high volume profile over here on the sidebar over here for Bitcoin on the daily time frame, well, you can see zooming in, you still are closing in. If I zoom in now, it's going to change the whole profile. So let me just clean this up a little bit for you. But if you zoom in, you're actually closing just above those bars, right? Just above those bars over there. That's the clear level to be flipping. 68,000. I would prefer to see a little bit higher. The key level, $69,000 for me personally. But as per the high volume region, the points of control is coming in just below that, right? Which means if bulls continue to hold above that level, leading into the election phase, remember we had marked out all of these for months. We had been focused on these levels, more specifically the 6-month level. Then we had to look at the 160 days following the halving cycle. Then we had to look at 680 and 685 days into the cycle from the cycle low. And we viewed all of this as a major point within the market where we're looking for a transition, right? And we got exactly that. That's where we said expect the action will take place, expect volatility will come into the market. And then the last line that we have marked off over here, just pre all the action, is of course the election phase, which we finally reached that date, right? It's coming in, of course, tomorrow. So if history is to repeat and this consolidation does hold, this is your SOS phase. Remember the sign of strength. That's where you're looking for price to start to push up. Now, we will have validation and invalidation levels. Remember and understand that the trend is your friend until the end of the trend. And as it currently stands, you have your lows and you're putting in higher lows throughout, right? So maybe, just maybe, this could be your next major high low, despite the fear that's currently in the market. That's your key level. Of course, if you start to break below this level over here, that this is a little bit debatable. This could still be consolidation. Maybe you do something like that and you come back down to test about $62,000. But the key and obvious level to be holding is going to be this one over here. Anything that drops below the $60,000 region over here as your last major high low in the market will be significant, right? If you break and hold below that, that becomes the validation or invalidation level, depending on whether you are bearish or bullish. And personally speaking, I wouldn't want to see price hold under the $60,000 region. If it does, we have to consider that maybe it was a left translated cycle and very lackluster crypto cycle, and prices are going to be going lower. So basically what I'm saying over here is, even though you have pent up liquidity and you might come back down to this region, I'll have a little bit of stable coin supply ready in the event that you come down into these zones, and I'll be looking to allocate, right? Remember, when you are allocating into key areas, you want to be a bit more aggressive as you get closer to your invalidation, and you want to be conservative towards the top side, right? So that's that pyramid approach. So you'll buy small amounts there, and then you buy large amounts as you get close to the invalidation. So using that pyramid approach as price comes into those zones. So we're still waiting for that SOS phase to play out. Now, a sign of strength as well would be if the bulls can get back above the previous quarterly high. That's at $70,000 region. And don't expect that overnight you're going to flip the 69K into support, right? It's been a resistance level for a very, very long period of time. And that's why this is a key zone, right? Flipping this whole region here into support is major, and that will create the springboard and the strong foundation and base to catapult price into the final phase of the bull run, which would look something like this, right? Which would look something like that. We're looking for a huge move off of that level. So to get that huge move, it is going to take time. Please do understand that it will take time, and we need to see price first get above 70,000, which is your previous quarter high. So what do I expect will happen in the short term? Now, it all depends if it's going to be a Kamala victory or Trump victory. If it's a Kamala victory, it will probably be taken badly by the majority of the crypto market and the risk markets. That's ultimately the way the sentiment at least suggests things will play out. I'm viewing this region over here, which is probably where a lot of people have placed their stop losses. So this is why I say, in terms of the pent-up liquidity over here, if Kamala wins, you're probably going to reject over here. You're going to come for that liquidity at those lows. You'll probably sweep that level for a quick drop down into the $62,000 zone. And then that's probably where you're going to be placing your bids, right? If you are still a believer that the cycle will continue, or a bull lever. If you're a bull lever and you think the cycle is going to continue, that's going to be the area of interest, $62,500. $62,500 would sweep that liquidity at 65K, where the majority of people are probably going to be placing their bids and stop losses, take them out, and then hit the mid-range level at 62.5. Find some level of support over there. You can see, I'd be basing my entry off of this region over here at 62.1, the little order block that led to the first big move up over there, and looking for some sign of a reversal from that point. So Kamala win, initial dump, and then probably consolidation at those lows for quite some time, and then things will regain momentum. Remember, we can have a look at the prior candidates who have won, and every single time, it's led to continuation and new all-time highs for the stock market. And then we'll still look for 2025 to be the proper bull run for the crypto market. That's been our outlook for quite some time. If Trump wins, probably you'll see price consolidate and hold up over here. So let's clean that up. If Trump wins, this is probably what you're going to see. Price will compress into these EMAs over here. Maybe you hold up within this region, and then you suddenly get a violent candle towards the upside, smashing through everything. You'll always retrace some of that, and then you have continuation. So that's my best guess, right? If we are playing speculators games over here and we are guessing, that's what I'll be looking at. The good news is that you can win a full Bitcoin risk-free, right? How do you win a full Bitcoin risk-free? Of course, on Banter Bubbles over here, you can come through and guess the price of what one Bitcoin will cost by the 1st of January. And that's a risk-free way, right? All you have to do is go through to the link in the description below. Everything is explained over there for you guys, how to win a full Bitcoin. You need to use these specific links. Each link qualifies you, right? If you sign up and make a small deposit, each link will qualify you to one guess per week. So every week you can come through to Banter Bubbles over here and you can chuck in your guess for what Bitcoin will be. You can see where are the majority guessing. It looks like the majority, I believe, they believe it's going to be, let's go from this one over here, anywhere between about 83,000. We got some at about 87,000. And then we got some other big guesses at that $99,000 mark by the 1st of January. Let me know in the comments. What do you think? Give me your guesses right now. I'm actually curious. What do you guys think? Just put the number like 88, 75, 65, 42, whatever it is. What do you think by the 1st of January Bitcoin will be? And then we'll see what the rest of you in the chats at least think. While you're putting in your guesses over there, let's have a look at the total cryptocurrency market cap. I see the guesses are coming in 96, 92, 86, 72, 95. Okay, 109,600. Are there no mega bears here? No one's calling for 20K. 82, 93, 56. Okay, Mark Morris, a little bit bearish, calling for 56K. Okay, we got 81, 120, 68. Interesting. 200K. Okay, nice, guys. Nice. Let's see. It's very quick to the end of the year, right? Not too much longer, only about 60 days or so. So anyway, let's continue. Looking at the total cryptocurrency market cap over here. Also, trend is your friend till the end of the trend. Again, if you break this orange line, that is going to create a major sweep towards the downside. That would be rather bearish, but as it currently stands, you're still putting in high lows and higher highs. This is still trending towards the upside, and you are contending at the $2.5 trillion mark with major momentum. Now, if there is a Trump victory, maybe you do get a big candle that pushes through over here, and that will start to break that resistance, but then you still need to consolidate above this region, backtesting it as support at that $2.6 trillion zone before marking up and leading to higher prices. The Bitcoin dominance is tearing an absolute hole in the altcoin market, right? You can see over here, huge move. That is a very strong weekly candle. We spoke about this on Friday and Saturday, where we said it's going to be very interesting to see what the Bitcoin dominance weekly candle looks like. And as it currently stands, this is a face melting rally for the Bitcoin dominance, which means if you've been positioned heavy in the Bitcoin market or in Bitcoin specifically, and you actually did the hard work and homework, it's not actually even hard work, it's just the homework of looking at your favorite altcoin versus Bitcoin to determine whether you should be long on it or not, then you should be pretty happy, right? You should be mega up in your positions. And personally, our biggest bets have been Bitcoin and Solana. Those have been my biggest two positions for the entire cycle. So, or at least, did I say Bitcoin and Solana? Bitcoin and Solana have been the two biggest positions. Solana's outperformed Bitcoin. So we've done very well. Now it's approaching the end of this. Now, how high could this go? If I had to put in again a wild guess, I would say the most probable zone where you're going to reject on the Bitcoin dominance, the highest that I can really see it going is probably about the 63% region. However, you do still have this downsloping trend line, which depending on when it hits that level is still coming up a little bit higher than that, right? So it's all dependent on when you get to the zone. For example, if you were to just continue at this trajectory, well, that could mean about 64.5%, which is huge, right? That is huge. But give or take, anywhere between here and about 63% over here, you should expect the major top to be put in on Bitcoin dominance. And then you're looking to position in the opposite direction, which is why I've said probably over the next 60 to 90 days is where you see the very start of the altcoin sector rebounding, right? A lot of damage can still be caused in the next 60 to 90 days. So please do be aware of that, right? It's always darkest before the dawn, right? And now we're moving into the darkest territory if you are an altcoin maxi, specifically an ETH maxi, because ETH BTC continues to get hammered towards the downside over there. ETH USD is still kind of holding up, but you should be always measuring against Bitcoin because Bitcoin is the lower risk play and just the easier trade to be taking. So you should always measure ETH US or at least the altcoin against USD pair, as well as the altcoin against BTC. So in this case, ETH BTC getting absolutely hammered over here. How low will it go? Honestly, I don't know. Timing wise though, I'm still stuck with the same thing. You know, we're saying somewhere by the end of January, we should see a major turn, which gives you about 60 to 90 days for a major bottom to be formed on the ratio over there. So here's your ETH chart. You know, holding up over here on the upsloping trend line, but just like the rest of the market, I do want to caution you guys to always be careful when it comes to your trades and understand where you are right or wrong on the trade idea, because if you do start to breach this level, this is a lot of pent-up liquidity as well as a major psychological level that a lot of people have been focusing on these high lows. If you start to take that out, well, expect you radically going to approach this $2,000 region, which was a key level, right? This was the level over here, was major support that led to the upside move. You did test it once, twice, you know, maybe you come into that zone one more time and you even sweep it. Be mentally prepared for that. I'm just outlining what could be a worst case scenario, just so you understand as it currently stands on ETH USD. At the end of the day, you know, this is still high lows that are being put in over here, and this is an ascending triangle which is currently forming. But the only problem with the ascending triangles is they work best when the prior trend came from the bottom up, right? If it looks something like that and then you start to form the ascending triangle, that's incredibly bullish. Right now you've come off a very, very strong downtrend, and oftentimes that more resembles a bear flag, right? Now, I definitely wouldn't see this meeting the bear flag measured move, because that could mean all the way down to $1,000. That would be pretty catastrophic. But nevertheless, let's just trade the chart in front of us and monitor it one step at a time. Okay, what else? What else have we got over here? Let me know in the comments if there is anything else that you want to have charted, or we can save the altcoins for tomorrow. Let me know. Some of the altcoins that I do want to have a look at is the meme coin sector, which continues to dominate. It's absolutely unbelievable. If we look at Murad's recent list, you know, one of the coins that I called a long time ago, FOG, is starting to work its way up the ranks, right? Very, very good. Hold the rank, 110, and you got the HHI, which on the bottom over here is the 𝗕𝗟𝗢𝗓 index, right? Ultimately, if you look over here, it says it's zero is a perfect even concentration. So the lower the number, the better. On the chart over here, it's being ranked like that. The higher up that is means the lower that it is, which means Michi is one of the best at the moment. But you got FOG working its way up with 110 and 36 over there. And if we look at the chart over here, this is one that I brought to your guys' attention right over here at the bottom of the purple at 14.3. That's where we started to gain our exposure. You're up 116%. Given what the rest of the market is doing, these are phenomenal results, right? So don't fade the altcoin sector. I do think these are ones to watch. You can see a lot of these are in our portfolio. We do have 𝗕𝗢𝗜𝗓, we have Giga, we have Lock-in, Frog, Popcat, we have to talk about its breaking trend. We have Retardeo, we have Bitcoin, we have Mini, we have MOG. And those are the ones that are in our portfolio, at least the Kyledoops portfolio on Whale Room in the Discord, right? So if you go in the Discord, those are part of the portfolio. I said, let's talk about Popcat. Let's go to Popcat. Popcat is breaking trend, right? So something to be aware of. I did say it's likely to happen very, very soon. And now you're starting to get the break of trend. What does that mean for Popcat? Popcat is probably coming back down to $1, right? So please be aware of that. A move down to $1 is a real possibility. You know, you're looking for something like this percentage-wise. That could be still around 20 to even possibly 30%. Since we establish our positions all the way down here and risk to reward, it doesn't really make sense to chop in and out of the market at this point of the crypto cycle. When I say this point, I'm talking about where the purple trajectory is now, right before you start to see acceleration. I'm going to continue to hold this position. However, if you're somebody that entered later on in the market, maybe you entered in somewhere over here at about like 115, maybe 140, for you, it is probably a good idea to rather take the profit and wait to enter a little bit lower. You're going to get a lower entry price anyways, right? So those are some of the things that I'm looking at over there. What other ones should we look at? Let's see. How's Marga doing? Okay, Marga, I mean, if this hasn't taken out all-time highs into the election phase, I don't know, guys. You let me know in the comments. What do you think? I personally can't see this being one of the top performers. You know, make America great again. You'd think that would be, should be already pumping at all-time highs into the election phase, which we're 24 hours away, and it becomes a buy the rumor, sell the news. But it's still hanging all the way down here. So probably, you know, maybe want to rotate out of. Okay, what else? What else, guys? What do we have? Say. We can have a look at Say. We can have a look at 𝗬𝗎. Let's go back to the layer ones over there. So if we look at Say over here, Say starting to lose some key levels. We wanted to see it hold up above these previous wicks over here. So I'm going to zoom in. We wanted to see Say hold up above these wicks over here. You've now swept that. You are coming into the upsloping trend line, but very, very similar to Ethereum as well as many of the altcoins. If you do start to lose these levels over here, this is a lot of pent-up liquidity underneath. A lot of stop losses will be placed over here from people that got in over there. And remember, a lot of time has passed as well. So if they start to approach there, they're probably just going to bail out. And that's where you start to see those sweeps down into the 20 cents region. However, of course, if you do see on a lower time frame support coming into play, this is still high lows. It's going to be completely dependent on Bitcoin and the FOMC as well as the election phase. And that should give, the altcoins a boost, or if it goes badly, the altcoins are going to nuke from that, of course. Okay, let's see. Where is 𝗬𝗎? Okay, so 𝗬𝗎 also losing the range high, right? If you continue to hang under the range high over here, this could be distribution following what was, of course, an absolutely enormous move over there. And if you do distribute, look down below to $1.44. $1.44 is a possibility. All right, let's look at Solana. Solana also, just because it's one of the most invested coins. I know that you guys are probably all holding some Solana at least. This is the key level, right? I said I don't really want to see Solana break below the white line, which is 157. As it currently stands, that's exactly where yesterday's wick came into. You want to see a bit of a low form over here alongside Bitcoin, and you want to see major support found. Failure to do that, of course, starts to open up the possibility that some of these altcoins could move a lot lower. In terms of percentage for Solana, next major support for me personally, I'd be viewing around the range quarterly, which is about another 10% down. That is at about $142, right? $142. So we'll do all the requests, everything as well in the Whale Room Discord. For any of you that are not in Whale Room Discord, there is a Black Friday special, which is currently running. You have 26 days left to join. You're getting 42% off a yearly membership and 25% off of your first month. So the link is in the description below over here for those of you that want to take advantage of the Black Friday special. Let's keep the rest of the requests for tomorrow's show as well as for Whale Room later. I'm going to cut off over there. Thank you all so much for joining. Have an absolutely stellar day and survive the volatility. That's all you have to do, is survive the volatility. I'll see you all on the next one, and cheers for now.